The government is on an overdrive. Days after a slew of reforms were ushered in, the finance minister today promised a big boost for the insurance sector. This on a day the Parthasarathi Shom committee submitted its final report on the controversial tax rules GAR and also its draft report on the retrospective tax amendments to the finance minister. Hello and welcome. You're with We Mean Business. I'm Shweta Rapal Kohli. On the show today, we're asking, will this damage control and reform overdrive work or not? Let me introduce our guest on the show today, Mr. V Bhide, former Revenue Secretary with me here in the Delhi studio. Also, Mr. Sudhir Kapadia, National Tax Leader of Ernst Young, joins us from Mumbai. Mr. Nageswara Rao, MD and CEO of IDBI Federal Life Insurance, also from Mumbai. And Mr. Gaurav Mashruwala, Financial Planner, joins us from Mumbai. Also with me here in the Delhi studio, my colleague Sapna Das. So, a big day really for the insurance space as the Finance Minister today announced a slew of changes to give a big boost to the insurance sector. A much needed one really. Sapna, take us through some of those details.
Well, we're actually expecting the finance minister to say something on the Shom panel recommendations because the report had
got a call saying that he's going to brief in just half an hour's notice.
So we were all pleasantly surprised when he started off with a slew of measures on the insurance sector, the life insurance sector. Right. Not all of them are very easy to understand, so that's why he handed out a very detailed press note once the briefing was over. But net, what it really means is that he's trying to give a big fillip to the life insurance sector, though of course he will also be having a meeting shortly on for the non-life insurance sector. Particularly on the life insurance sector, you have to break it up into two aspects, two sides. One, the tax changes that he's proposing, and second, the relaxation in the investment norms for life insurance companies. Very quickly on the taxation side, first in terms of the indirect taxes, possibly consumers can look forward to some kind of a reduction in service tax rates when they pay the first premium, not all regular premiums,
but at least on the first premium.
But the first premium.
Right.
Second, he's also saying that it should be done on the realization basis. There is a collection of service tax and not on accrual basis, which is what has been happening in the industry to an extent.
Right.
On the direct tax side, he has said that there could be a separate limit apart from the 1 lakh rupee ATC limit, which is already there, wherein some more insurance pension products could be looked at. Probably he's trying to give an indication that he's preparing the ground for the coming direct tax code. So that's what it really indicates. Now, what those products will be, we'll have to wait and watch and see.
Okay.
The other thing he has also mentioned in the same breath is the fact that existing life insurance policies will have to be grandfathered. Mr. Bhide would actually, have a good idea about that because in the original direct tax code, these were some of the points of contention, points of discussion at that point in time.
Okay.
So he's basically trying to indicate towards that. That's my reading. Maybe wrong also.
And also the fact that banks are now allowed to sell more than one insurance product or more than one insurance company. That's also going to...
IID is working on these norms right now that, banks will not be treated, the banks who are in bank insurance, they will not be treated as insurance agents, which means you can sell an insurance product of more than one insurance company to as many consumers as you like, and it's up to the consumer to decide what he wants to do. Very quickly on the investment side, Shweta, two things. He has said that this is also to give a fillip to the infrastructure sector. The life insurance companies can invest in SPVs, not just of public sector enterprises, but any company.
Right.
Any company, provided the SPVs, it's a wholly owned subsidiary of the parent company, and also last but not the least, the 75% stipulation where, 75% of the investments for life insurance companies have to be done in AAA rated paper, in excluding government securities. There he is given a further leeway saying that you can also invest in AA rated paper, rather the paper does not have to be particularly AAA rated. So he's trying to
break it down for our viewer. What does it mean for the insurance space?
I didn't know how to talk on insurance at all. No, I think basically, I'm just going by conjecture. I was traveling, I didn't get the gist of what was said. The footprint of life insurance from the LIC was so huge that it was just not possible for other companies to enter the field. So maybe this is the way of opening it up and making it worth their while to getting in. Because when you keep on talking of increasing FDI limits, by itself it doesn't make sense unless you improve and expand the sphere. So that seems to be
right. And this is really a precursor to the FDI limit coming.
Probably.
Right.
He did indicate on that also.
Sapna as usual jumps the gun somewhere, but
that we grant.
But I'm used to it. I suffered for it for 5 years, roughly, yes.
Really.
But let me put it this way: the tax situation. It's if you go back to the 2009 direct tax code, when it was a draft put out for public debate, one of the points that we were laboring with was, by and large, the personal savings of people at the time they currently superannuate, whether in the private sector or in government, was pathetically low.
Okay.
It was not exceeding 50 to 60,000 per family.
Right.
And I mean, let's not look at the top executives and the other, but basically the armed person who works white collared. That's not enough even for one illness.
Absolutely.
So there was a problem, and that, if you notice in the first draft, there was a lot of talk of giving annuities in insurance some sort of tax concessions and set-offs.
Right.
So the whole idea was to drive people to take on savings which improve insurance cover.
Right.
And that should be exempted from taxation. That was the dimension then. Now, probably this is more to do. I wouldn't second guess what they are likely to do in the DTC or what's happening. But if you remember, it was when you were saying remove all the incentives on ATCC or all the others. The idea was you were also giving encouragement.
For this living.
And some of this seems to be
geared towards that.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.